Hello, my name is Richard Krivo with Daily FX Education, and I'm here today to speak with you a bit about how I identify the trend in trading. And before I get into that, the identification part, let's talk for a minute about why it's important to be able to know the trend. Think about it this way. If you were running in a race and you had the choice at the beginning of the race to have the wind blowing at your back or blowing in your face for the entire race, which would you choose? There's no question about it. You choose to have the wind blowing at your back because that's what's going to assist you in getting to the finish line. It's going to assist you in gaining your overall objective, in winning that race. Now, in a race, you don't have that particular choice. You don't have that option. But in trading, you do. Before you ever get into your trade, you have the choice of selecting to have the wind blowing at the back of your trade or blowing against your trade. That's the importance of taking the trade in the direction of the trend. The trend shows you, in effect, which way the wind is blowing on your particular trade. It shows you market sentiment, which way that market sentiment is favoring this pair to move. It shows you the way the big banks, the professional traders, which way they're taking this particular pair. And our whole objective in trading is to identify that trend and then identify a point at which we can hop on that trend and ride the trend to a certain point, a certain level of profitability, and then exit the trade with our profit. That's what it's all about. Okay, so in determining the trend, what I do, the exercise that I go through is I scroll through all the daily charts. And here I have three drawings, three examples of daily charts that you might run into. This particular one shows a nice strong uptrend. And it's also trading above the 200 period moving average. I always put a 200 period moving average on my daily charts. If price action is above the 200 period moving average, that shows a bullish bias on the pair. If price action is below the 200 period moving average, that shows a bearish bias on the particular pair. So here we've got a nice move. It shows price action is moving smartly to the upside right here. Now here we have a move to the upside, but it's more modest. We can see the angle is not quite as great. This isn't bad. Of the two, I'd certainly rather be trading that particular pair, that particular view that I'm seeing on the daily chart. Now in this situation, the pair is just trading flat. I'm not going to trade this pair because I have no edge. The edge being, if it's trading to the upside, I know I want to buy it. If it's trading to the downside, I know I want to sell it. This doesn't give me that edge. And as a little sidelight here, if I can't tell within about 5 seconds, literally, which way the pair is moving, I'm on to the next chart. Why make it more difficult than it is? If you find yourself looking at a daily chart and going, well, let's see, I think it's moving to the upside, but then when I look at it this way, I think, and maybe it's trending to the down. If you start getting into that, on to the next pair. Don't even waste your time. It's not giving you enough of an edge when you're doing it that way. So you want to be able to identify that trend very quickly. You want to have it just jump off the charts at you. Now, once you've determined the pair that you're going to trade, the one with the greatest move to the upside, showing the greatest trend potential to the upside, then what I would do is I'm going to get into something we call multiple time frame analysis. And multiple time frame analysis is simply looking at several different time frames on the same currency pair to determine how I can best optimize my entry into the direction of the overall trend. So let's say this daily chart here is replicating that one, and we can see nice upside movement. That's the way we want to take it. We only want to buy the pair. And then we scroll down to a 4-hour chart, and we see that the pair has moved to the upside, and then it's begun a little retracement here. And it's also beginning to flatten out. It's beginning to stall at this support level here. That's what I want to see. Now, I go down to a 1-hour chart, and here's the retracement on the 1-hour chart, and price action flattens out quite dramatically here. Now, this green line represents the point at which I would enter the trade long. If price action breaks above this level, in other words, the highest point on this stall, on this retracement right here, I want to know about it because that's when I'm going to get back into the trade. I can either monitor this visually, or I could set a price alarm. Market scope charts have price alarms built right into them, so I could set a price alarm at that level that's going to alert me either audially or visually that the pair is breaking up that level that I wanted to monitor. It's breaking to the upside of that level, and take a look at the pair because you may want to enter at this point. Okay, that's how I use identifying the trend and multiple time frame analysis in my trading. Again, my name is Richard Krivo. I hope you found this helpful, and thanks for attending today.